Why illustration 4 means the last part especially. See here, this part is from illustration 4, where it's a OCI. Okay, this part is illustration 4. Okay, so I'm combining this along with this problem. So we'll start doing this. So as per this problem, what is asked is you have to prepare consolidated statement of profit or loss for the year ended 31st March 2007 for the Pepper Group. So the parent is Pepper and the subsidiary is Salt. Okay, so the first one is Pepper bought 70% of Salt on 1st July 2006. Okay, so we can, since you should be able to type also or drawing the diagram, instead I'll type it. Not wait for which working note I should put first. All mandatory, it should be group structure. I need to write heading also. It's not mandatory. I'm writing just for the clarification. Right. How much shares are acquired by Pepper in Salt and when this acquisition happened? So this is a very important point. So I can write in terms in words like that. Right? 2006. Okay, so this is what I used to always draw as a diagram. Okay, Pepper acquired 70%, and when it is happening on 1st July. Now it's very important. When is your financial statement ending? I want to answer also.
31st March 2017.
So what's the beginning?
1st April.
1st April, year also matters. 26, right? And it ends by 31st March. So the acquisition is happening in between. When it's happening on 1st July 26. We are very much worried about the post-acquisition period. So I'll just write this part as this is pre-acquisition and this is post-acquisition. How many months is pre-acquisition? Or is how very important is how many months you have for post-acquisition.
3 and 9.
3 and 9. So if one is 3, obviously this is 9 months. 3 months. So this is very important. Okay, this diagram is not mandatory. This is for your understanding. So 9 months is the post acquisition. Okay, then. So this I found. For everything, I'm not going to use 9 months. For certain things only we will use again. Let's see where and all this 9 months calculation we'll do. We'll sum it up at the end. Okay. So second working note. Let's see what else is there. So normally, see, I'm not following the book as such. I will be following my script. So in the book, they soon after this they went for NCI computation. I don't want to change the format. Last time and all we did the PUP, and then we did any depreciation part is there. Then we went across. So same way we do. The first adjustment speaks about what an item of plant in on 1st July, that is at the time of acquisition, an item of plant in the books of Salt had a fair value of 5,000 in excess of its carrying amount. At this time, the plant had a remaining life of 10 years. Depreciation is charged to cost of sales. That is on 1st July, when they are after acquisition, when they are revaluing a particular item, they got to know that that plant is 5,000 greater than the carrying amount. So 5,000, I can otherwise call it as appreciation is there. But, so this 5,000 worth of plant, we have to find the depreciation also at the year, right? And from 1st July till year and 31st March, how many months? Just now we computed, no. Unmute and tell.
9 months.
9 months. So yearly depreciation will be 5,000 divided by 10, but I'm not providing for full year, I'm providing only for 9 months. So that computation I have to do. I'll go accordingly here. So this, because this depreciation will have an effect in NCI. So I want to do the workings accordingly. You can follow the book or my style, whichever you feel comfortable. So here I'm going to do the fair value. Fair value depreciation, the fair value adjustment. How much is the fair value adjustment? Have to know it is 5,000. For that fair value. So I'm going to have to write depreciation. Nine divided by y into 9 divided by, okay, or else I'll do 10. N is the number of years and 9 by 12 is for the current year depreciation. Okay, so it's equal. E 10 by yes, it is 375. 5,000. Okay, I just computed that. Okay, 375 is my depreciation. Okay, this is working note done. So what is working note 3? Let's see here. During the post-acquisition period, salt sold to pepper for 4,400. Of this amount, 500 was included in the inventory of pepper at the year end. Salt earns 35% margin on its sales. So salt had sold to pepper. Salt had sold to pepper for 4,200. Of this amount, 500 was included in the inventory of pepper at the year end. Salt earns 35% margin on its sales. So, normally what we do, 35 by 135, right? But here, actually, we cannot put 35 by 135. That is one thing here. Why? Because if you see the previous problem and all, they said very clearly, which is included in the sale. The profit is included in the sale, like that they would have put it. But here they said out of 4,400 rupees, $500 was included in the inventory of pepper at the year end. Okay, so this is still there with them. And salt earns 35% margin of its sales. So this 4,400, they didn't mention whether it is a cost price or the selling price. Okay, so 4,400, they sold it. But this 500, sorry, this 500, it is not clear whether the profit is included or the profit is excluded. They just mentioned that salt earns a 35% margin on its sale. So this 500 in this 35 by 100 only you have to take. You can compare the previous problem, what I'm trying to tell here, you will understand. So if you see, let us move here. See here, the previous problem you see. Zebedee sold 84,000 worth of goods. These goods had cost of 56,000. So very clearly mentioned on, and they still had 36,000 worth of these goods. So you can easily tell this 36,000. It is cost for Xavier, but it is the selling price of Zebedee. Means some profit is included in this. It's clearly mentioned. Likewise, any previous problem, if you go, it is very clearly mentioned. See this prunes. Sultana sold goods to prunes for 20,000, making a markup of 1/3. So I think this also we discussed that it is included because markup is included. But in this problem, there is one thing different. The post-acquisition period, salt sold to pepper for 4,400. Yes, this 4,400 includes selling. It is the selling price and it includes the profit. But this 500, Of this amount, 500 was included in the inventory of pepper at the year end. So salt earns 35% margin on its sale. So this 500, in this 35% we have to find out. We are not aware whether this 500 includes this 35% profit, or so we have to assume that this is at cost. So we have to find 35% of 500 to add it. It's not 35 by 135 in this case. Further, any explanation will come at the end. Repeat. That is best profit in inventory. I'm going to find only 500 into 35. This will come again. See. It's 175. This is the unrealized profit part, which is included. Okay. And coming to the third adjustment, goodwill amounting to $800 arose on the acquisition of salt, which had been measured using the fair value method. Goodwill to be impaired by 10% at the year end. Impairment losses should be charged to operating expenses. These are some of the points. Since you people will have highlighter option in the question paper if you take up ACCA exam, you can highlight where it is transferred because you will definitely forget this. Depreciation is charged to cost of sales. Okay, these are the points which you should remember. Okay, so that is goodwill impairment. Okay, impairment charge to operating expenses. Because I listed yesterday. Later on I striked and wrote it. So that's why I'm telling better highlight and keep it. So goodwill of 800 arose. Okay, goodwill is 800 and the impairment is 10%. Why this impairment we are worried about when we are finding profit or loss? Because goodwill impairment is an adjustment which will appear twice. And here in this particular part for NCI, we have to detect that goodwill, right? So for that purpose, we have to compute the impairment. You can either compute it or else later also you can just put as one of the line and you can show the workings then and there. I'm not going to compute here. I'm just putting note 4. I think that is the adjustment done. And salt paid a dividend of 500 on 1st Jan 2007. So dividend paid by salt actually post acquisition period should not be shown if you are aware of, right? So that part we'll come to that later. So now I'm going to prepare my working note 4 is NCI. Okay, those who are attending the FR session, I would like you to ask on my behalf, just check with the tutor. Are you okay? Is it okay to write NCI or it should be written as non-controlling interest later? Just check that once. And some of you were asking about the contact number of the tutor. I think it is better to take it from him. I cannot share anybody's personal number. Okay, you can take it from him in the class. Normally, if you drop a message, whenever he's having time, he'll definitely reply to you. And he's also going to appear for tutor exam, not tutor exam, ACCA student. He's a ACCA student as well. So he's also having his exam. So keep that in mind. Only for necessary doubts, you message him. Okay. So working note 4 NCI. Fine. We'll always start this non-controlling interest from profit for the year, right? So profit for the year, it is given as 1,100. So this entire profit of salt, does it belong to pepper? 1,100?
No, ma'am.
No.
No,
Why?
ma'am.
Which
Time
part
was
is not? So
pre-acquisition.
correct. Correct. So this is salt's profit. I'm going to add one. So I'm just writing given for your reference. Okay. There I got this one. Sometimes we panic and we don't. So it is 9 by 12. What is belonging to us? We have to think. This is prepared by the parent pepper. So 3 months prior, that is, sorry, first 3 months, you were not holding, you didn't acquire a salt. So that profit you're not supposed to take. So this is equal to 1,125. Something is wrong. 825. Then from this, the two adjustments, working note 2 and working note 3, I'm going to deduct it. So less. Is equal to 375 minus. Okay, I'll paste this. So I'm not keeping decimals. And it's done. Okay. So 375. Okay. Then I have to adjust this unrealized profit in inventory. Profit, I want to remove it. So what I should add or subtract?
Subtract.
There, better to mention it according to me. Since 175. Okay. Then what else we saw? These two adjustments we did, and I said this goodwill I'm not going to do. I'll straight away take it. Goodwill impairment is there. Impairment, so it's a loss. Impairment, so they said it is 10%, right? 800 into 10%. Yeah. So dividend paid is there. Will dividend come in the profit and loss account? Maybe a silly question, but I just want to know.
Investment income, right? Dividend?
Yes, it will come in investment income. Will it come here?
No, ma'am.
That will come in investment income because so you have made an investment. This is not the dividend what you are paying. That's why I asked this question. I thought some of you will get confused. No, it will not come. It will come in SOCIE. I thought some of you will tell that. It could salt paid a dividend. It's not parent. Pepper is not paying a dividend. Salt is paying a dividend. Salt is paying a dividend means pepper is receiving the dividend. So it's an investment income. So it will come in your SOPL, but it has no role to play here while computing NCI. Yeah. And that is straight away, it won't come here. Whatever salt is paying to NCI, that won't come here. It's this NCI is the combined profit of parent and NCI. That part alone will be taken here. So this is done. So whatever we'll call it as adjusted profit, right? Higher one belongs to NCI. So we have to find out NCI shares. How much is NCI share? If you see, how much is owned by Pepper?
Ma'am, 30% is
30%. Percent is NCI because Pepper owns 70% means 30% is NCI share. Therefore, Pepper 59 belongs to the book. It's 58. I got one. They didn't round it off. They just left it 0.5. I round it off. It's coming to 59. Okay. So NCI is the share in Salt's profit is 59. That. So now what is the requirement here? We have to prepare consolidated statement of profit or loss. One more is there. What is this? Salt land increased in value by 500 over its value and the date of acquisition. And there was a loss in the financial asset held at FVEI, no, FVOCI for the year 100. All items are deemed to accrue evenly over time except where otherwise indicated. Okay, it's a very important line, except where otherwise indicated. It's a very important line. You come to. So now tell me, what is this 500 and 100? Where will it come?
ma'am, 500 is the revaluation, no, ma'am, of land.
You're asking or answering?
Answering, ma'am.
Yeah, correct. It's a revaluation of land only. Okay, so where it will come? All the revaluation won't come. Is it a revaluation gain or loss?
It's a gain.
Gain. So where it will come?
OCI.
OCI. So I have to prepare. So I'm not going to do any because they themselves calculated in gain. Leave that 500. What is this 100? Financial asset. IFRS 9. IFRS 9.
Loss, ma'am.
Yeah. What is it? It's a loss. Fine. Where we have to show this loss? Profit or loss or OCI?
SOPL.
Think SOPL means both are there. I'm asking whether you will show it in OCI or in only profit and loss.
Only in profit and loss, ma'am.
Read carefully. It is mentioned the loss on its financial asset, second line, loss on its financial asset held at fair value through other comprehensive income. Where will you show?
Oh. OCI.
OCI. Yes, it will be shown in OCI. So we have two items to be adjusted in OCI, which I don't think we require a note because they've given the value. They didn't ask you to compute. Value is given, just add or subtract, you have to do that. Okay. So let us do let us do the problem now. So here I'll just write also a solution just to differentiate, nothing else. Okay, so I'm going to start with consolidated statement of profit or loss for the group. Statement of profit or loss for the year ended 31st to March 2006. Off. Okay. So I'll just put the amount. I didn't. Yeah, tell me. how revenue, I have to go in that order only, what is given. Okay, considering the revenue, what you do first. This is a mid-year acquisition, keep that in mind and tell.
31,200 plus 10,400 into 9 by 12.
Very good. What else? What else? You're right, two items are there. Yeah.
Minus 4,400.
Minus 4,400. Don't worry about this 500. This 500 plays a part in the inventory closing stock. So here in the revenue, we should remove this 4,400. This is an intra-group transaction. So we have to remove it. Right. You're right. So let me write it. So it is revenue. And in revenue, I'll just show here at both the values. That is 31. 10,400 entirely does not belong to the parent, right? That 9% only will be taken care. Parent and NCI, that combination happened only for 9 months, right? So in minus 1,400. Additionally, we are going to. What is this 4,400? Just this 4,400 is intra. Intra, if I write means it's intra group, understood? Okay. So here, $34,600. Okay. Then, what is the next item? Go according to the format. Cost of sales is the next item. Okay. So less.
Yes, ma'am.
Tell me what and all I'll take.
Ma'am, parent, you'll take 17,800,
Parent I'll take,
salt,
okay, 17,800. Then
and for salt, 5,600, 6 into, into 6 by 12.
9 by 12, where all of a sudden 6 came
Sorry. 9 by
into
12.
9 by 12. So 5,600 into 9 by 12. Okay, what else?
Add PUP
Agree.
plus fair value depreciation.
Add PUP. What is that PUP? Why you are adding here? What's the reason?
Ma'am, is the remaining inventory, ma'am.
You have to minus 4,400 and then add it. Yes or no?
Yes, ma'am.
You are removing the entire inventory part, actually 4,400, and you are reversing. Since it's a cost of sale includes that, you are reversing that 175. Because in your inventory is having, inventory itself is a closing stock, right? Closing stock normally we'll subtract. Cost of sale formula is what? Opening stock, add purchase, less closing stock. So since it is deducted, you are reversing it. 175, you are actually adding back. Okay, so how to go ahead, we write here. I'll write it. First, as usual, I'm taking the entire amount of pepper. That is 17,800. Then I'm adding not the entire amount of 5,600. Instead, 600 into 9 by 12. Then I'm deducting minus 4,400. That is the intra-company transaction. And I'm reversing the profit part, which is there already. This. Anything else? Have anything else here?
Fair value depreciation.
Yes, actually, I did this. It's coming somewhere else. Correct. No, impairment should be treated in operating expenses, and cost or depreciation should be treated in cost of sales, right? So here, depreciation, that is cost of sales, I should take. How much is that? How much is the depreciation cost of sales? What I should do? I should add or deduct?
Add 375.
Add. Yes, because this entire cost of sale is a negative item. So add the depreciation. 375. And right here, all the items are right here. This is infra. This is UP. This is depreciation. I think you can understand. Okay. So this is equal 17,800 plus 18,150. One more thing. Thousand one fifty. Okay, so cost of sales done. Then revenue minus cost of sale. What is it?
Gross profit.
$1,400. Next item. I'll go there and see what is the next item here. Operating expenses 8,500 and 3,200. What I should do? Tell me. Yeah, tell me what are the amount I should take. And bit faster.
8,500 plus 9 by 12 into 3,200
Okay.
plus impairment also.
Yeah, 8,500 plus 3,200 into 9 by 12. What is the other one you added?
Impairment 80.
Yes, yes, because we highlighted here, impairment of goodwill is taken to operating expenses. So how much is impairment of goodwill? It's 80. It's, you can see in NCI, the same 80 I'm taking here. Why I'm not putting a minus symbol? Because it's operating expense itself is a minus symbol. It's equal to 200 into 80. 10,980. This I'm subtracting. So if I subtract, I should get profit from operations. Okay. $3,470. And what is the next item given there? Investment income. What is it? What is the investment income?
2,000 minus dividend.
Minus dividend. Will you deduct the entire dividend? Next question. When they are paying dividend on 1st Jan 2007, which is 1st Jan 2007. Okay. Tell me. That is, dividend will be paid at any part in time. Okay, normally, but that belongs to the. It can be a current year dividend or it can be an interim dividend, whatever it be. 500 is paid as dividend on 1st Jan 2007. Tell me. Is this entire dividend? See, don't find 9 by 12 or equal it is. This is you are receiving, right? You as a parent, you're receiving from your subsidiary. You're receiving as an income from your subsidiary. Don't do 9 by 12 because 9 by 12 speaks about the post and pre-acquisition. Salt is paying dividend. That's what is given here. 500 is paid. So Salt is paying dividend means who and all are eligible to get that. Yes. Okay, how much belongs to the parent in this 500? Salt is entirely paying only to the parent.
Entire 500.
Entire 500 belongs to who?
Parent.
Parent. Salt, who and all are holding the share in salt? Only parent? Is it 100%
Even NCI,
subsidiary?
ma'am.
Even NCI will take no. So in this 500, how much belongs to the parent?
70%.
70%.
70%. That part alone you will take, because in investment income, if in case, I'll tell you, in the investment income, nothing is mentioned. See, we have only the Pepper's investment income. We are not bothered about how much is there for NCI. That is not our part. In this given information, what and all belongs to NCI only we are taking. How much NCI received as a dividend? Why we didn't add here in NCI? Is that NCI would have taken, right? So here in this part, we have to consider the investment income given in salt, and in this we have to deduct what, sorry, given in pepper. In this, whatever is received from NCI, sorry, from salt. So pepper's investment income is 2,000. In this, anything received from salt as a part of dividend should be removed. So entire 500 does not belong to pepper. In that only 70% belongs to pepper. So like income is 20,000, 2,000, 2,000, right? I'll take 2,000 here. Fine. Fine. 500, but Salt didn't pay 500 to me only. It's the entire dividend declared by Salt. And in that 500, only 70% they paid to me. As a parent, I received only 70%. That part I have. Doing because so it's equal to minus
Ma'am, 2000. You missed 10.
1,650. Is there any doubt in this part? Okay, or else file the doubts, the end will. What actually? I'll just see here anything else is there. Profit before tax. Okay. Ask whether you can use PBT. At the point you can ask NCI can use as such. PBT can be used like that, because he told once there won't be any deduction in mark if there is a spelling mistake. So you can ask whether abbreviations can be used. You save your time. Right? Every minute matters. Okay. What's the next item? It is given tax. Income tax is 2,100, and for salt it is 500. Okay, so income tax expense. Tell me, will I add and take or any other computations required?
2100 plus 500 into 9 by 12.
Yes. 500. Take also in 9 by 12. Obviously, the tax on the so see, while doing Excel formula, if you see brackets also will have different colors. If I open one more bracket, we'll have a blue color. So just have a error is coming means you get annoying that time. Okay. So tax also be computed. Done. So 645. 4,000. problem is done?
Yes.
Who is that? Yes.
Share of profit, ma'am.
Exactly. Share of profit, and one more thing, OCI is there, no? Yes, you have other comprehensive income. So profit for the year is done, but we have to show other comprehensive income also. Correct. So OCI. Whether it is allowed. If it is allowed, peacefully write the shortcuts. At the end, you can mention, no, OCI is what, NCI is what, everything at the end, you can mention it. Check whether it is allowed. Okay. So OCI. So first item, what is this? Land increased by 500. So this they are speaking about this land is increased by 500 is an increase in revaluation. So it's a revaluation gain. So gain revaluation. It is given as 500. You take it as such. N by 12 computation because the increase in value, it is valued at the date of acquisition. Date of acquisition, that's it. Take it 500. That's why I said the last line is very important. All items are deemed to accrue evenly over time, except where otherwise indicated. Here it is indicated very clearly. Date of acquisition, the value is 500. Right? So you need not find 500 into 9 by 12. Here, coming to the financial asset held at fair value through OCI, they say it is a loss of 500. Okay, financial asset, there is a loss of 500. Okay, anything else is mentioned there? When they valued it, anything is mentioned there? Okay, how will you compute this? Will you take 100 assets or any other computation is required? This is Saul's loss of 100. In the salt is having one land and one financial asset. Take like that. Land they are revaluing after acquisition or else on the date of acquisition. So the entire 500 goes to the owner now. Who's the owner? The major shareholder. The entire 500 go to them. Whereas financial asset, is it mentioned when it is done? When the valuation is done?
No.
No. So what I should do here? I
9.
take the entire 100. People, only 5 minutes left out. Fast, let it go wrong also, no problem. But answer.
70% of 100.
70% of 100. Finally, we'll be sharing this OCI gain also will be shared with both of them. So 70%, 30% will not come down. I'm asking something else. What is mentioned? All items are deemed to accrue evenly over time, except where otherwise indicated. In the land, they said very clearly this date is after acquisition or the date of acquisition. So we took entire 500. In the financial asset, anything mentioned like that?
No.
No, sleeping. Okay,
No.
so this 100, how will you compute? The entire 100 will you take or any computations required? They said accrue evenly, no? What do you mean by that?
Ma'am, 9 by 12.
9 by 12. So 100 into 9 by 12. So this you have to consider. This part here is very important. Just all items are deemed to consider or assumed to accrue evenly over time. Okay, except that is also very, very essential. See, except where otherwise indicated. So here for land, it is mentioned at the date of acquisition. But whereas for the other thing, other item, they didn't mention when the value was computed. Otherwise, if nothing is mentioned, no, nothing specific, you have to assume that evenly. So continuously the profit and loss was happening. So this loss had to be split across the months. So only the post acquisition period you have to take this. Done. So now if you see sum is equal to sum. So all the three you take. This is your total profit and other comprehensive income. Okay, so profit for the year is this, and whereas this 5,070 is altogether. Okay. OCI. Okay. So the last part is we are going to split among each other. Show. You have to always split and show individual separately, profit for the year separately and OCI separately. Okay, so I'll just take profit attributable to. So I'm seeing this word everywhere, so I'm all as attributable to first owners of owners of a parent. If you see NCI also is done. NCI's profit we already computed in working note 4, how much is the profit? It is mentioned 59. 59 is NCI share. I'm going to map it here. 59. Whereas owners of parent is how much?
4645 minus 59.
Minus 59. Only profit, I'm not taking OCI yet. So it's equal to 4645. Yeah. One more, what is it? Profit attributable to, that is OCI attributable to other comprehensive income also you have to find it. Here. Are also owners of parent. I should pay. So valuation gain or loss, how much is it total value?
5070
Yeah, 5070. Okay, so
minus 59.
or also it's going to be the same. I think it's in there, or will there be any share? Let's see. So for NCI, I'll take everything. So they have 59 already. So 59 is there in OCI, total comprehensive. I'll better write instead of OCI. I'll write it as total comprehensive. Just give me 2-3 minutes. Okay, I'll finish. Comprehensive income. Because it's actually total OCI. So total comprehensive income attributable to owners of parent and NCI. Okay. NCI, we know already they have 59, right? So 59, then what are their shares? What and all they have? 59 is fine. That is from profit or loss statement. Only P&L. How about OCI? How much do they have? What is their share in that revaluation gain of 500 and loss of financial asset? You're not telling fast. I don't have a 9 o'clock.
Revaluation over land will be full, no, ma'am.
Revaluation of land fully you're giving to NCI, who's holding only 30%.
No,
The answer. Can you repeat those?
This thing 70-30, ma'am.
70-30. That is also clear. NCI, how much is the percentage?
30%. 30%.
500 into 30%. Okay, because I want to finish fast. That's why I'm rushing. 75, what you should do? Should minus, okay. 10.
75 into 30.
Huh? So this is the fine. This is what is NCI is equal to. Into 30%. 187. Okay, 187 is the share of NCI. Okay, now what is the owners of parent? How much will they get? Which value you will take and which you will direct? This is for total comprehensive income. Tell me clearly. Your class will start at
5070 minus 187.
5070 minus 187. This is nice. 5070 minus 187. So this is your total signal. Fine, done with this problem.